although we are seeing fundamental influence in the Fed cattle cash arena impact futures as well. How low can we go? Nobody knows, of course. Good afternoon, everyone. Welcome back to the Comstock channel. I am Relph with Comstock Investments. Going to do a short video today about what's been influencing the cattle market specifically and take a quick look at things as we're coming into about the last hour of trade for the week before we then go into a holiday week, which is shortened sessions and, of course, no session on Thursday, which is Thanksgiving Day. So that all has an impact. But on the cattle front, the biggest thing that we've seen so far this week from a fundamental standpoint is the Fed cattle cash deterioration. Over the last 2 weeks, we've dropped about $15 in the negotiated Fed cattle arena, half of that coming from the start of this week to the end of this week. Early week trade was as high as $218 in the north, $225 in the south. Then by the end of the week, we're $5 to $6, $7 lower than that. Dress trade $345 early in the week, as low as $335 as of yesterday's official reported deals. So a big drop off in that Fed cattle cash, as well as the futures market at times throughout the week. So in addition to the lower cash trade, we've also heard of heavies getting penalized by major packers, particularly in the north. We've also heard of major packers buying with deferred time and actually utilizing that time here over the last few weeks and continuing to do so, which makes us think they're fairly current. We've got a lot of heavy cattle out there. Last week, we had 183 pound average steer carcass weight. This week, that number 980 pounds. That obviously having a big impact on the market as well. And we know if they're averaging that, then there are going to be a lot of carcasses over that 1050 threshold where they're going to start being subject to penalization. When I had heard there was a threat of that, I thought this is going to get cattle puking all over the country, even just with the idea that it could happen. Even if they didn't do it, the fear of it would be enough to bring some cattle to town. And then they went ahead and implemented those penalizations. Now we have a situation where the feeders are up against the wall. The packers have the upper hand in a major way. And then just to add insult to injury, we reduce not only the 10% reciprocal tariff on Brazilian beef, but the additional 40% tariff on Brazilian beef announced that was being eliminated just late Thursday. And we have cattle on feed report coming up this afternoon at 2 o'clock. By the time you're watching this, we will likely have those numbers in front of us to see if they lived up to the bullish expectations that the trade had set for this report. As we take a look at the trade coming into the finish line here for the week, we have grain markets fairly quiet. Not going to delve into that too much as we're going to stay focused on what's going on in the cattle. And the grain markets, again, fairly quiet as we come into the close here. Feeder cattle have traded limit lower at times, particularly right at the open today. We had the 925 limit all the way out through the August contract, and we were trading below $300 in every contract after January while that was occurring. So we had March trading at $299.30, deferred contracts as low as $294 when you get out to next October, and that making new lows for the move in many of these contracts and some contract lows in the deferreds that haven't been on the board for very long. We did recover well off of those lows. We've had an $11 trading range in the March. In the case of the January, that's been a $10 trading range today. We are at the upper end of that range, albeit still down $1.30 for the day, currently trading $3.15 in the January, coming into the last 35 minutes of trade. On the live cattle front, similar type situation. We did see some of these contracts clip the 725 limit lower early in the session, but they have rallied back now. We've got December trading about $6 off of the low. February, similar type trading range, $9 range, currently $2 off of the high and about $6 off of the low as well. I would say that the equity futures had something to do with it today. We know that when equities are firmer, the cattle are usually beneficiaries of that. And we did have the Dow trading over 700 points higher at times today, still trading 528 higher as I speak here. NASDAQ up 130 plus, while the S&P is up 60 and has been up as much as 90 points at times throughout the session. So where do we go from here? That's going to depend on how the market reacts to the cattle on feed numbers that come out this afternoon. And that should dictate trader sentiment going into next week. I think that there was large anticipation that we were going to see tariff reductions. Now, How quickly are we going to open the Mexican border? That's something that Trump is pushing for as well on his cheap food agenda. That's not something that's going to go by the wayside, especially as temperatures are dropping and the activity of the New World screwworm flies is decreasing, and our overall effort to decrease food prices. We often talk about the USDA's primary mission is cheap food. Trump is completely on board with that, and when you have him pushing for it, somehow it magically tends to happen. No matter how much we hate having headlines dictate our markets trade, that is a lot of what's going on here, although we are seeing fundamental influence in the Fed cattle cash arena impact futures as well. How low can we go? Nobody knows, of course. And if anyone tries to tell you otherwise, they're a fool. So we'll have to just see how things progress here and hope that we do see some higher Fed cattle cash next week, and maybe we see some recovery in the broader market as we move forward here. So that's what's going on this afternoon, particularly what's impacting the cattle market this week. If you guys have any questions, go to our website at comstock.com, sign up for a free trial of the Comstock Report subscription, or give us a call. On behalf of producer Brianne Jenkins, I am Eric Relph with Comstock Investments. We will see you next time here on the Comstock channel.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.